Great. Good morning, everyone. Welcome to the October 16, 2024 meeting of the trustees of trust funds. I will call the meeting to order, and as first item on the agenda, ask for a motion to approve the minutes of our September meeting.
I'll move approval.
Second.
Okay, any corrections or changes, additions? Hearing none, we'll call the question. All in favor, signify by saying aye.
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 Chair votes aye. Okay. Peter, what can you tell us about?
Well, I did meet with Attorney Sullivan,
Okay.
and his indication to me was, I gave him my thoughts on why something was not included, and he said, well, you're waiting for all the thoughts from everybody who's giving thoughts and before they come up with a final draft. And I said, fine. And when a final draft is done, it'll go back to everybody for their approval.
Okay. Are they anticipating getting thoughts from us, or?
Well, he had indicated he had talked to you at some point.
I got a very, very early draft
Yeah.
of the document, which, I mean, it was very skeletal at that point. So, and I did not get the impression, I thought it was given to me as a FYI, not as a, would you take a look at this and comment? So, I guess, do you think that you gave him enough?
I don't know.
Looking for something in writing from us, I guess.
Yeah, I mean, he indicated that they were waiting to hear, and I forget which department they were waiting to hear from before a final draft that would then be circulated to everybody for their comments.
Okay, all right. So he'll come back to us again. All right. Okay.
For everyone, can you just refresh the issue on this trust?
All right. So, for the record, this is the new, or proposed new Sister City Trust, which will be a fund created to underwrite or partially underwrite the cost of maintaining the Sister City relationships, including communications to and from, presumably travel to visit with the various sister cities that Portsmouth maintains. And the very beginning draft suggested that distributions made by the trustees would simply be done at the request of the city manager, and it doesn't include the language which we have advocated for in the past, that that request be pursuant to a vote of the city council.
Right,
So,
okay, that was the issue,
Yeah.
or the primary issue. Right.
Okay,
And
so,
and you related that to him?
As my thought, not as the trustees' thought. And I did happen to run into a couple of council people, and it's at least the council's thinking is they would be the ones who would be authorizing any disbursements.
okay. All right. So we'll look forward to the next draft of that, and then we'll formally discuss it here and give a written comments if necessary. Okay. All right. So we don't have Brittany yet. So let's jump to the.
Let me make sure she's there.
Not here, or?
No.
Okay. All right, let's go to the Public Arts Trust,
Yep.
and that should be pretty
So
straightforward.
I received a check,
Yep.
and it's for $25,000.
And I just wanted to, because of the amount, and I like to run these things through all of you before I deposit it. I gave you the backup that's been received. It's part of the CIP program for $25,000 that will be distributed into the public arts. I actually gave you a copy from the CIP.
Right.
Where it shows each year a $25,000 distribution to the public arts. And this is the first installment. So I just want it to be formally recognized and approved for your approval for me to deposit it.
The page we got that you forwarded us is right out of the CIP.
Correct.
Okay.
Yeah.
And it shows giving money every year. How can we concur that going forward, because if we do it this way this year, how do we know that that's what's been approved in the CIP?
The page that I gave you is from the CIP that was approved by the council.
Okay.
So you're saying if the CIP changes, how do we know?
Yeah.
Okay, well, so give us a page every year.
Well, plus we won't get the money if they change it.
Right.
Well, that's right. I mean, I would not, as one, would not accept this every year unless it is what's approved in that year.
Correct.
Yeah.
In other words, I wouldn't just copy the same one and
Right.
say this is, and every year as a CIP gets adopted, there'll be a clean page for this in it, and I will take a copy of that page to give to you
Do
every year.
these
Correct.
funds come from the general fund?
Yeah, yes, they do.
So, I'm just curious how the CIP works. Prescott Park, for example, infrastructure is in the CIP, right?
That's right. But
So, do they, that's significant money.
Well, except.
Do they fund that, actually transfer funds into
Well,
it?
Not
This
until the
this
project
here,
starts.
they have sources of it. A lot of it's bonded. This 25,000 wouldn't be bonded. This would come out of the general fund.
I do not want to speak out of turn because I am not sure exactly where the money came from. I can't issue a check to the trustees because for the on staff, I represent the trustees. I'm not sure where the funds came out of.
I'm just curious.
But it says on here that it's general fund,
I'm sure it's general fund, yes.
whereas Prescott Park will be a bond issue.
Yeah, and that money doesn't come to us.
No, I know. I'm just wondering if they actually fund particular CIP accounts when they vote on it, not necessarily because of
Correct.
bonding,
It's only as the project begins.
except for this.
Well, because this is this is a little bit different.
Yeah.
Well, and interestingly enough, the council adopts the CIP,
They can change.
but it's not funded until the budget's passed.
Right. And then it's appropriated but unspent money until
Right.
the project is actually built.
That's correct.
So the question that I have on this, I think we'll, I guess, move to accept the money today, but, so, the monies we traditionally have received related to public art projects are earmarked for art on the location where the project has been, unless the city council has had an override vote.
Correct.
So this would be an unallocated.
It would
because-
go in with the other monies that are unallocated, and I would keep track of that. I'm keeping track of every single deposit that's going in and what it's allocated for. This will be the same way.
And so if the city decides to spend this on any project, they can do that without that override, that.
It would have to come back to us.
No, I understand that, but what I'm So when I looked at the CIP here, one of the things that says that these funds would be eligible for matching funds with limited availability. So if the city was to designate this for a piece of art and receive matching funds for that art, would it then become allocated to that account, or would it always remain sort of free, spend it on any project?
I think I would keep track of it separately, just knowing that if they're allocating it for a specific piece and we're supposed to be receiving matching donations for a specific piece, I would track it as such.
Okay.
Okay?
So we had talked about this briefly at the last meeting. So my understanding is that the city council has just passed a new public art ordinance, and it may address some of these issues. So if we could
I will get a copy of
get
it.
a copy of that, and I assume it might tie in with our the actual trust agreement. So for our next meeting, if you could give us copies
Yes.
of each of those, then we can look at, maybe answer these questions.
Yeah.
Yes.
Okay. Any other questions on the public arts thing?
So you move to accept it?
Yes. Would somebody want to make that motion?
So move.
Second.
All in favor?
Aye.
Aye. Unanimous. Okay. Now we get to hear from Brittany.
Sorry, I'm a few minutes late.
That's all right.
Morning.
I can't
First
seem
of
to find
all-
a rhythm getting out of the house with the
First of all,
2-year-old.
congratulations.
Thank you. She's very good, yes. But it's definitely a new routine in the morning, so trying to figure it out.
Are you still on maternity leave?
Yes, yeah, I'm
Oh,
back 2
thank you.
days a week. So I'm back Mondays and Thursdays at the high school, and then I'll be back November 3rd full time.
Wow.
Yep,
You're busy.
When do you go back full-time?
November 3rd. Yeah, so it's coming quick, which I can't believe, but yes.
So let me sort of frame this up for friends in the audience. So since the last time that you had reached out to us in May, we did some research to try to locate any documents relating to this Haven Metal Trust. Unlike a lot of trusts we have, there is no trust agreement.
I did look too, just so you know, and I couldn't find anything
Oh, good.
in our files.
I appreciate that. So what we were able to do through assistance with some outside volunteers was locate the original will from Horse Haven and 1844, I think it was. And so we have the terms of the original will, and then we found that about 20 years later, 1862 or so, that his heirs met with the then selectmen and sort of redefined what the criteria were for awarding these awards. And of course, we no longer give out little gold medals, but and so we're unable to find anything since then until we get to somewhere around 2019, in which I think you came up with that memo from the principal to the department heads saying, here's, or the academic departments, I shouldn't say department heads, saying, here's what we're going to have for awards this year. And so I don't want to put words in everybody's mouth, but I think what we would be interested in hearing is, now that you've had a chance to give it more thought, what would you like to see? And is it something that would be specific to just the very near future, the next few years, or would you like to see something as almost a redefinition? What we don't know yet, because we haven't met with the city's legal department yet, is what the process will have to go through. But I think in our preliminary conversations, we're open to trying to make this allow for wider distribution to the students.
Yep.
The question will be whether we have to go through a formal non-judicial settlement agreement with the AG's office, et cetera.
Yep.
And if we do that, we want to see if we can do it in a fashion that will allow for, for
Longevity.
long-term use and some flexibility without having to go back every few years because you're no longer offered this course or that course. So,
And the basic request that started this, if I'm correct was you were looking for funds for the awards.
No, so we have funds for the awards. We still give out the little gold medals, and we have funds for those. You guys allocate that in the spreadsheet that I get every year. Where it came from is the document that I sent to you has criteria, and the core classes are fine. Like, we've always been able to like continue with how it's written with our core classes. And I don't know when it was written in, because CTE didn't exist, I don't think, when the original document was put into
Oh, it did, it didn't.
existence. So there's criteria on that sheet for CTE that's not attainable. Like, it requests a certain number of credits that
Oh,
you
right,
can't you can't get through a CTE.
Okay, that was
so I
it,
don't even
yeah.
know where it ever
Yeah.
came from.
I have your May email, if that would help you.
Yeah, yes, I think it said that you need like 6 credits in CTE.
Computer
and it's,
science or something.
Yeah, it's 6 credits for business courses, 5 for technical career, and 5 for computer science. Computer science only came into existence like 6 or 7 years ago.
Who said you needed 6 or 5?
This is just
We
the
don't know.
document that I was given when I started, so I have no idea. It's just like a memo. I don't even know who decided it, who came up with it. Like, so. The Courtney Richings, the department head, the administrator for CTE, came to me last year, and she's like, "We can never have a CTE student." And I'd actually never seen this memo before, because it runs through our registrar. So the registrar meets with the department heads, and they go to their departments to get names and everything. So she sends everything out. So I had never even seen it. So when she handed it to me, I was like, you can't get 6 credits for business. It's not even possible. So I think if we could somehow not be more vague, but like that they're a completer in a CTE program. Like, so if the qualifications for what a completer is change over the next couple of years, which I don't see them changing, but if it does, and it doesn't necessarily list a specific, like, we have like 5 other programs. Like, I don't know why just business and computer were called out, but then the other ones just say technical career. So I don't know if we want to just say from each program within CTE, because I know they're looking to add more programs. So if the programs change, then it's not specifically like called out. So if it could just be a little bit more vague to say they're a completer in a CTE program, and then each program within can award it to someone. So auto, computer science, business, culinary, health science, they all have one, kind of like the different departments within the core academics.
Yeah, I think the thing to do is to get together with your group, come up with a recommendation, and make it vague,
Yeah.
to include that program,
Yeah.
but attainable goals of that program.
Yes, yeah. And we keep a list each year of who the completers are, because Courtney has to send that to the state for like funding pieces and different stuff, because part of their funding, I think, is tied to how many completers finish in each program. So we encourage the kids to do it. We track it. Like, it's easy for us to be able to pull that list and like at the end of the year be able to look at the kids. But it would be, the other piece would be, and I don't know if this makes a difference or not, because it usually is, but it would also have to be a senior. Generally speaking, most underclassmen, like, there's a few that if they start sophomore year, if there's room in the program, they can complete as a junior if they really work to fill it into their schedule. But generally speaking, for a lot of the programs, they can't finish until senior year. So it would most likely be a senior each year that's getting it, which I don't know if that makes
And
a
would it
difference.
be a cumulative from their high school career?
Yes, yeah. So, because like for business, they can start taking some of the business classes sophomore year, but then a lot of times it takes them, because of how our scheduling works, it takes them till senior year to finish it. But for like culinary, for example, because it's 2 two-year courses, they generally take it junior and senior year, because that is so popular. Most underclassmen can't get into it before then. So that's like auto, we usually have some spots in that. So we do have kids that start that sophomore year, do finish it in junior year, and then they do an internship in senior year instead. So it can vary based on the program, which is why if it's a little bit more vague, we would have more students.
I'm just curious, is this, in terms of process, is it first, you're here now discussing this with us, but is it more appropriate first step to go to the school department, school board to,
I don't-
as Peter says, a recommendation, run it by us and make sure we're okay from a legal point of view? To
Yeah,
say yay or nay?
I'm not sure the school board would even know what the qualifications for this are, so it would probably be the school first. It could then, if you want it, to go to the school board, but I would say the recommendation first would probably be from the school
school.
between
From the
the
superintendent.
administrators.
Yeah, I would say you've got to at least go through the superintendent.
Yeah, which if I go to Zach first, he's going to be like, you got to, like, he knows what the Haven medals are. He gives them out each year and stuff, but like, I don't know as if he would be able to tell me like this kid had this many credits in this and this
Yeah.
GPA and like whatever the qualifications are. So I think he would probably come back to me and be like, can we talk about what the specifics are and like what would be best moving forward?
Obviously, it's not going to be in place for this year.
Yeah. But we were hoping to get started early, so any chance we can get.
It could, because you're going to give them out in June.
Well, that's true.
Yeah, it's
We can do this if we know what direction we want to go in. So, did you have other questions, Dan?
No, I think,
So, are there courses or curriculum outside of the CTE program that is also not covered?
No, because the other ones we do the 5 core subjects, so that pretty much encompasses most other things. The only other thing in the long run, if we really wanted to expand it, would be to do like art, theater, like the elective type stuff. I don't know.
welding is in CTE,
Correct.
isn't it?
Yeah.
So that's one of the programs?
Yeah.
Building trades.
Yep. So that building trades is the one they're trying to bring back. That left before I was there, so probably
Oh,
7
really?
years
Building
ago.
trades no longer?
So they're trying. Courtney is trying to work to bring it back in more of a. We send the kids outside right now to a program called New Hampshire Trades, and they do like. A different piece on each. So they do like plumbing, electrical, like HVAC, like they do like a unit on like,
you?
yeah, your grandson did it, I think.
He did.
Yes, yeah.
And
so
he
the kids
enjoyed it.
really like it, yeah,
Yeah.
because it's basically like a hands-on test run for a bunch of different fields. So to my knowledge, I think Courtney's trying to bring something back that's more similar to that than it just is like construction trades, because construction trades was what actually left prior, so.
Do you still have architecture?
Yes. Yep. So it's architecture, welding, auto, health science, business, computer science, culinary.
Well, culinary is one of the things that started the whole program.
What about that daycare thing?
Oh, yeah, education. Sorry. They just changed all that, so it's careers and education now. But yes, education is the last one. I was trying to go down because they're all in like the same hallway. So they still have the
This is
preschool.
off the subject. Does the school still do the Holocaust Studies course?
They do, yes.
Okay, thank
Yep.
you.
So yeah, I think there's definitely room if people felt strongly about it, I think, to expand to, arts or, other pieces like that. But the big one the reason that this came up is because CTE, some of those classes were specifically written into that memo, but were not attainable. So that's where this all started.
So I think what Peter and Dana and I are thinking is that the school ought to sit down and kind of write its, if I could design it my way today, what it would look like.
Okay.
And I'm thinking, is there a way of describing it without having to state the only curriculum that's going to be subject to it? Is there a way it could be more general? So any program that's offered by the school having, 3 years worth of credits, something that it, without having to list math, science, language,
Yeah.
et cetera. And, it's pretty clear from the original Haven documents in the arrangement that was made in the 1860s that the purpose was to award academic excellence, if you will. And the criteria or the coursework that it was awarded for in 1845 was different than the ones in 1862, which are obviously different than today. So I don't think, it would be nice if we could do something that would be able to go forward for a long period of time without having to come back and go through this process, non-judicial process every time you dropped a course and added another.
Right.
So I think that the goal might be to, work with the superintendent and, we've identified one of the problems that gets us here. Let's figure out a way of having an overarching solution to it.
Okay,
And
I
then-
can start.
And then
with that.
we'll take that and chew on it and then consult with the legal department. And if we can do it, we'll start a process. And I think we should be able to get it done by next May or something. It all depends on how long it'll take you folks to.
I can probably have it done in the next week, at least at the school level, and then I'll bring it to Zach after that. So I'll meet with Jackie and Shay, the directors of curriculum, director and the coordinator of curriculum. We can kind of put down something, because I think Zach will work better if we already have some ideas, and then we can kind of discuss it with him. So, I mean, I should hopefully be able to get you guys something pretty quickly.
Okay, well, we meet once a month, so
That would be my goal. I'll try and get it to you guys for the next meeting.
meeting is November 20th. So
Okay,
if you could
perfect.
get me something
Yeah.
before then, I'll make sure it's on the agenda for you.
Awesome.
Okay.
Awesome.
Can I ask a question unrelated? Do you have any I'm referring to scholarship funds that we give out every year, or you award. Do you have any idea where we stand in the peer group as to the amount that Portsmouth High allocates versus them?
We are on the high end. For
Anyone
most other
higher?
high schools.
we're on the high end, she said.
High end, I know.
Yeah, not that I know of. I haven't heard of any schools in the area that give out more. I actually have schools that will contact me now to be like, do you know of any like not Portsmouth residents, like, do you know of any like other scholarships in the area and stuff? Because we've fine-tuned the process pretty well to keep it pretty organized, and it's public on our website, so people can go on and see it, so they know like how many scholarships we're giving out and the amounts for a lot of them, unless it's like the ones that are like the big funds that we do. It varies because students could change depending on like each student, how many we have apply on a given year and stuff. But the ones that are like a specific amount that we give out to like one student, those are all listed publicly on our website. So I get inquiries from other high schools and stuff pretty regularly asking for where we're pulling information from and everything. So I think overall our high school is on the high end. I haven't done specific research in terms of the dollar amount to know, but yeah.
It's amazing how much we give.
It really is.
Yeah.
Yeah. So, and I'll start that process again in November is when I start to kind of go back to all the outside committees asking if anything's changed amounts. And then Judy gets me your guys' amounts. So I usually post in January prior to you guys actually updating, because I think January is the meeting where you usually give me the spreadsheet. Right. So I'll post last year's amount and just say like, I put an asterisk next to it and say these will change, these will be updated as soon as I get the updated spreadsheet, because New Hampshire Charitable Foundation does the same thing. Theirs is usually January or February. So, but we get them posted in January so the students can start to work on them.
Great.
Yeah. Yeah.
Great. Other questions?
I don't think so. The only one to Mortimer will be a little different this year because that amount will probably be more. So I'm assuming.
It'll probably be more this year.
Okay, so we'll have
But
more.
that'll be decided in December.
January. Usually set the January meeting that you
Okay.
vote. Yeah.
Okay.
And then, because it'll have had time to accumulate.
And that will have renewals too. So I'll put that out for
Yeah,
renewals
yeah.
for all
So
the kids.
So those were tweaked a little bit recently.
Yes.
So you need to take a look at, they're slightly different between one Mortimer and the
Yes.
other, so. but
Yeah. So I did last year, we did award it to more students probably than we might in the future, knowing that we were going to get renewals so that the kids, because they'll end up getting more money by being able to renew. So like, whereas like we would maybe give out like a smaller number of scholarships moving forward. So depending on how much the amount is, the number of students that we award might be
So we need to keep track of that then, Judy.
Oh, I'm very organized with
They
it.
keep track of that, yeah.
I send Judy a spreadsheet that has
Yeah,
every.
because that'll make a difference on what'll be awarded in the future year.
She keeps track of it, and then she'll send me when everything's awarded for our records, and then I can see who the renewals are. She keeps it on a separate
Yeah,
tab for
okay.
me, so, yeah.
Good.
Yep.
I forget, I think the kids have to submit a form for the renewal, right?
Yep, yeah, it's a different form than the original one, so it's just a Google form, and they just submit information, any updated personal information, address, phone number, email address, all that, and then it asks for a transcript, unofficial. They can just take like a copy of their student profile from their student information system. It asks for they just have to write a quick blurb that gives like an update of what they've been doing and like if anything's changed with major, like anything like that.
And we send the money to the school.
Correct. Yes. Yep.
Good.
Still have a couple students that don't always go and sign the check, which is, I don't know how to, the school will call me and be like, I've called them 3 times, they haven't come down to sign the check. And then I reach out to the parents usually, and that usually gets them going. But yes, we're still working through the best process for that, but it only happens a couple times
Wait,
each year.
who has to sign the
The
check?
student has to endorse the back of the check because it's written out to them and the school.
Oh,
So the registrar's office or the bursar's office usually will call the student and say, hey, you need to come down here and sign the check. And every year I have 1 or 2 kids that don't go down and sign it. And I'm like, this is free money. I don't know what we're doing here. But usually I will call the parents because it's still in the system unless the parents have changed their phone number, and that lights a fire. All right. Thank you so much,
Thank you.
guys.
Good to see you.
all of you guys.
Congratulations again.
Thank you.
Good luck.
Thanks.
Morning, John.
Good morning, everybody. How is everyone this morning?
good, how are
Good.
you?
Oh, well, thank you.
I'm doing well, thanks. My audio coming through okay?
Yes.
Yeah. okay.
Anyone need a coffee?
Which one's, this one? I'm
Yeah,
good.
that's the one,
Oh, yeah.
too much to print.
Let me share my screen here while we're... I attempted to share the dashboard on the screen.
Yep.
Did that work?
Yes.
Yep.
Yep, okay, great. So I've got the quarterly deck to follow, but let me just start with this one. So this is the September dashboard report. If you look at the second column from the left, you'll see the market value totals. Same numbers we'll start the quarterly report with. Year-to-date performance very strong, continues to be driven by equity performance, although in the third quarter, we saw mid-single-digit fixed income performance for the first time this year. And I'll show you that in more detail in a little bit. You can see the year-to-date performance relative to the benchmark. Overall, the portfolio is doing better than the policy benchmark year-to-date, although you'll notice in the month of September it trailed by about 25 basis points. And that's primarily based on the allocations or lack thereof to international and REITs, and I'll go into more detail on that in just a little bit. And then just as a preview for where we are in the fourth quarter, all of the portfolios are up about 1/3% just in the month of October. And that's based entirely on stock market performance. Interest rates actually have risen a little bit this month, so bonds are flat to negative. Any questions on the dashboard?
Nope. We're good.
Good?
Yep.
Okay, great. So let me switch to the quarterly deck, and I think I'm already on page 4. Yeah, slide 4. As a reminder, I know you hear me say this every meeting, but I'll go through all the detail on, I've got the scholarship fund first for no particular reason other than maybe it's the largest. But all of the funds are invested the same way, so all of my comments apply to all 4 portfolios. Again, this is the scholarship fund. This is data as of September 30th, so just a couple of weeks ago. You can see the value in the upper left there, same as the dashboard report that we just looked at, 13.4 million. And then if you just go down to the next section, performance for the quarter, which is the third row down in the performance section, and it's the middle column, so 6.06% was the portfolio's performance for the third quarter. Another really strong quarter, although actually Q1 was even better than Q3. The main difference with Q3, which is nice to see, is we got a nice contribution from fixed income. And I'll show you that detail in a minute. On the right side of the page, I'm showing you the asset allocation. So again, the pie chart, shades of blue and purple are equities, so you can see, pretty much instantly the allocation's about 75% stocks, 25% bonds and cash. And then if you look at the table on the far right, I'll try to walk you through a little more detail here. It starts with equities on top, and so you can see the single largest concentration is in what we call large cap core. That's your S&P 500 holding. And the target in the model is 55%, just based on growth. It was at 56% at the end of the quarter, but we rebalanced that quarterly, as you know. Below that, on the second line, you see a roughly 10% allocation to U.S. large value dividend stocks. That is our current tactical weighting based on TD's views. That turned out to be a good contributor in the third quarter. SMID cap at 5% is precisely aligned with your investment policy. And then below that, and lastly in equities, we have our international exposure. We just have one holding to international developed markets at a 5% allocation. This represents a meaningful underweight to your IPS, which has a 15% allocation to international across both developed and emerging market. And we're currently underweight international. That actually hurt you in the third quarter, and I'll show you that detail I think on the next page. And then all the remaining categories are fixed income. You're roughly 22% in bonds. Is a portfolio predominantly a 1 to 10 year portfolio of investment grade corporate and U.S. Treasury bonds. However, we do have a very modest allocation where you see other fixed income right in the middle with two subcategories, bank loan and high yield. Those are below investment grade, so that's our very modest allocation to high yield, which historically has been, it's helped the portfolio. It's a very small allocation, but high yield has been among the best performing throughout the entire duration of this portfolio, which goes back to 2021. And then the balance in a short bond strategy. So overall, your fixed income portfolio has a duration of about 5, a little over 5. And the mix between government and investment grade is roughly 65-35. Any questions on the overall portfolio mix before I jump to the detail?
No. John, quick question. I'm looking on the left side on performance.
Yeah.
And year to date, 15.89, which corresponds to your dashboard, but your benchmark reference number is different. On here, it's 16.16, and on the dashboard, it's 15.41.
Yeah. Yeah, the difference is on the dashboard, you'll notice it says investment policy statement benchmark. So, Dana, the 15.41 represents the performance year to date for a portfolio, kind of a portfolio we don't have, but if we did, it would be aligned with the targets in your IPS. And the figure you see on which one was it? 16.16.
Yeah.
That's a default benchmark that gets applied to.
I All right, so it's a different benchmark.
It's a
than,
different benchmark,
okay.
yes, and it's the default benchmark that gets applied to any portfolio that's somewhere between like 69 and 80% stocks.
All right, thank you.
You're welcome. So let me jump to the portfolio detail. This would be on page 6. And what the 10 rows of this page represent actually the 10 holdings that you have in the portfolio. So if you look at the description in the upper left, you can see that top line is your exposure to the S&P 500, which we are expressing through a Fidelity ETF product. I'll remind you, all of these strategies as you go down the list are passive investment products. So there's no active manager trying to beat the index. We're trying to match the index. This strategy, which is very much consistent with your investment policy, remains the best performing internal models that we use. And it's largely a function of current trends in the markets as well as the exceptionally low cost of these products. And then the second column, you'll see the weighting. And so again, with the S&P 500, we've got a roughly 55% target weighting that gets rebalanced quarterly. And then on the far right, you'll see the performance just for the third quarter. So this is just June 30th to September 30th, and you can see in the upper right, the S&P 500 was up 5 3/4. If you go down one row, you'll notice that the Russell 1000 Value Index was just over 9%. This was the first quarter in probably all but one of the quarters that we've experienced since we built this portfolio back in 2021, where value stocks outperformed the S&P 500. We put this tactical weighting in, I think, roughly a year ago. We were a little early, obviously, in that tactical decisioning, but this was the first quarter where it really paid off. What happened in Q3 was a bit of a rotation away from the technology stocks that have done so well and which have driven the S&P 500 into other segments of the market. And so you'll see it in the value section, and then also in the very bottom row, which is our small and mid cap exposure, just under 8%, also outperformed the S&P 500. And then the third row from the top is your international exposure at 6.5%, also outperformed the S&P 500. In the third quarter, at the beginning of the quarter, you may remember there was a bit of a market disruption when Japan raised their interest rate for the first time. Surprised markets. Now, in Japan, interest rates are still exceptionally low. They raised it from 0.125% to 0.25%, but it was enough to trigger a bit of an unwind in what we call the Japanese carry trade, where investors were borrowing money at effectively zero in Japan and pretty much buying the S&P 500. So when they started to unwind that trade, you saw those big tech stocks sell off, and those tech stocks are a much higher representation in the S&P 500 than in the other equity exposures you have. So it really benefited value and dividend stocks. It also caused a decline in the U.S. dollar in the third quarter by about 6%. That's why you saw such strong performance from Europe. It wasn't because of outsized growth in the European markets. It was really a function of just the depreciation in the dollar. Now, interestingly, just in the past 2 weeks of this month, in October, we've seen a bit of a reversal on the international side. So, for example, month to date in October, the S&P 500 is up about 1%. Your value holding is up about 1%, and international's down about 3%. The leader month to date is actually this bottom row, small and mid cap, which is up about 2%. So we've seen a little bit of an unwind of that, a little bit stronger dollar. but a lot of moving parts this quarter. Second thing I wanted to point out to you on this chart is all of the fixed income strategies start on row 4 and go down to the second to last line. And if you just look at the intermediate bond category, the 3 categories in the middle, you'll see returns ranging from 4.3% to 6.4%. And that's purely a function of rates fell dramatically in the third quarter, about 70 or 80 basis points, when it became clear that the Fed, which did not cut rates at the end of their July meeting, was definitely going to cut rates in September. And the market fully priced that in by the end of the quarter. And that's what you're seeing there is primarily the positive effect on bond prices of interest rates falling. So this is the first quarter in quite a while where we saw mid-single-digit returns in fixed income. And just strong contributors across all aspects of the portfolio. I'm not recommending any changes at this particular point in time. Everything's working. The tactical allocations that we have are consistent with TD's current views. And then as this quarter has sort of progressed on, it's further kind of emphasized the value of our dividend focus and the underweight to international. We also remain underweight to high yield. It's the second row on the bottom, which is labeled high yield in the middle, and then 4 rows from the top, the category called bank loan. Those are your 2 products for below investment grade bonds. The returns have been good. We only have a 2% allocation there in total, so we're underweight high yield as well. And then just lastly on performance, if I jump ahead to page 8. So if you look at the tables on the left, starting in the upper left, just focused on the third quarter, your performance is that middle column, TWRR, that stands for time-weighted rate of return. That 6.06 is what we showed you on the first page. And then, Dana, this gets to your question.
Yeah.
It's a different time period, but your question about the benchmarks.
Right.
You can see that 5.92 is just the default benchmark that the system applies. And then your IPS benchmark is the 6.68. So for the quarter, the strong performance of international and REITs, your policy has a 5% REIT allocation, which we have 0 exposure to. REITs had a really strong quarter as well. That's the difference that you see between the 606 and the 668. If you jump down to year to date, consistent with what we showed you on the dashboard, you see the 1589 versus the 1549. And then at the very bottom, I'll just highlight from portfolio inception back in May of 2021, just under 7% performance for the portfolio, which is really great. You know, recall that the portfolio was built when interest rates were effectively 0 and just prior to the 2022 period where the Fed raised rates, you know, faster than we've seen at any other point in our lifetime. So it's really interesting to see, one, the very strong performance of equities over this time, and then fixed income, you know, having their worst year in decades, and then kind of finally recovering and benefiting from the fallen rates that we've just seen in the last quarter. And I think your portfolio remains probably the highest performing across all of my clients, between both your allocation to equities at 75 has been by far the biggest contributor. And then secondly, the choice of passive strategies. Active managers just continue to have a tremendously difficult time beating the indices in this market. That was all the comments I had on the portfolios. Again, the remaining pages are just the same detail for the other 3 portfolios. I'll jump to the economic update unless you have any questions.
Nope, we're good.
Okay. Just because we're having this meeting just a couple weeks into the quarter, I don't have my usual quarterly slides. However, I've got a couple of interesting charts to show you. Judy, did this got printed as well? Everybody's got this deck?
It did, yes.
Yeah, okay. Yeah, so this, what you should be seeing on the first page, it says WAC Perspectives October. WAAC is TD's Wealth Asset Allocation Committee. So this is the committee that fine-tunes our models across all the different strategies. And I just thought I'd share with you their latest piece. As you can see, just on the first page, we've got equities on top, fixed income in the middle. We're neutral on both, meaning we're not meaningfully overweight or underweight equities or fixed income. Within equities, our sense is that lower interest rates are going to continue to contribute and support to decent equity returns going forward. And in particular, we point out that high dividend yielding stocks have benefited from the prospect of lower interest rates, which makes their yields more competitive. We do expect additional market volatility between now and the end of the year. The big debate is how much is the economy slowing down, and to what extent will rate cuts offset that? And we're on the constructive side of that. We don't see anything close to recession in our economic forecast, but that is debatable. And then in fixed income, we just note that in previous easing cycles, which we have now entered, bonds have generated positive returns as interest rates have fallen 3 to 6 months leading up to the first rate cut. In this case, it was more like 1 month. And you just saw the benefit of that rate drop in the returns, as well as 6 to 12 months following the rate cut. So time will tell as to whether or not that's true in this case. Rates have actually gone back up a bit since the initial fall last quarter, but still remain below where they were in June. If I jump ahead to the next page, just a little more granular detail on equities. At the very top, you see U.S. large value. We have a modest overweight. We also have a modest overweight to U.S. large cap growth. In your portfolio, we're really capturing that through your S&P 500 fund, which recall as the single largest sector in the S&P 500 is technology. So you're kind of getting your growth overweight through the S&P 500, and then you're getting a tactical allocation to U.S. large value at 10%. And then just below that, if you notice, in international, we've got modest underweights to international stocks, purely due to what we view as underexposure to technology within European indices, as well as significantly slower growth prospects. All of these are already expressed in your portfolio. And then if you turn to the next page on fixed income, same points. You'll notice we have a modest underweight to intermediate corporate bonds, and then at the very bottom, a modest underweight to high yield. And as I said, your high yield exposure is only 2%. And then the thing, this is really a hedge on our part. We think the economy is going to do well, but if we're wrong, it's going to be corporate bond spreads and below investment grade companies that are going to suffer the worst. And right now, credit spreads, by which I mean the extra spread that investors demand over treasury bonds, is really narrow. So you're not getting a ton of extra yield in corporates right now, and so hence the modest underweight. And then the other thing I wanted to point out to you is if you jump to page, sorry, I blew this up so much I can't see the page number. Oh, page 4. This is TD Economics' most recent long-term economic forecast, and if you just look at it, it speaks to both the U.S. and Canada, but we'll focus on the U.S. If you look at those 3 bullet points on this page, we mentioned that the U.S. we expect to remain above its long-term growth rate for the remainder of 2024, before normalizing in 2025. I'll show you those levels in just a little bit. We acknowledge that inflation should continue to come down, but we think it'll be all the way through next year before it hits the Fed's target of 2%. And our interest rate forecast is for the Fed funds rate to get to 3% by the end of next year. It's currently 5%. And if you go to should be the next page, page 5, just look at the first, if you look at the far left column, very top, our real GDP forecast, and then just look at the first 3 columns to the right, you can see our annual expectations. So 2.6 in 24, slowing down to just under 2% in 25, and then back up to above 2% in 26 on what we expect to be an economic benefit from the Fed's rate cuts. And then if you go to the bottom part of that page, roughly 10 rows up from the bottom, you see the unemployment rate averaging 4.1% for 2024, ticking up a little bit in 2025 before ticking back down in 26. And then 4 rows below that, our CPI forecast, averaging roughly 3.5 for this year, 2.3 next year, and 2.2 in 2026. So this is a really, this would be great if this proved to be true. Hard to say whether or not we're going to see more economic disruption than what TV's forecasting, but the economy has continued to surprise to the upside through this whole cycle. I don't think anybody expected the economy to hold up so well with the Fed taking interest rates as high as they did. But what we've kind of learned is the magnitude of the stimulus that was put into the economy from the pandemic just has continued to kind of pay dividends, if you will. And then just lastly on the next page, I just wanted to show you our Fed funds target. So it's the very top row of the interest rate forecast. And you can see we're showing the averages here. So averaging 5% in 2024, averaging 3.4% next year. We think we end the year at 3%. And then kind of boring, if you look further to the right, you'll see 3% as far as the eye can see. There's not a lot of guarantees in the economy and markets, but I guarantee you our forecast will change as time goes by. But right now we see the Fed taking rates roughly down to 3%.
John,
That was everything I had for today. Again, no changes to the portfolio. Your portfolio is performing exceptionally well. And if this forecast plays out, I don't anticipate any significant tactical changes. At some point, I would like to add REITs back to the portfolio. But if, again, it's a bit of a hedge, if we do end up in a more dramatic economic slowdown, REITs will probably suffer as we continue to see very high vacancies in certain segments of the real estate market. So to be determined on that one.
Great. Peter?
yeah, Mr. Watson and I, because we're older, want to disagree. Social Security increase next year is below 3, and you're anticipating that the cost of living is going up over 3. How come Social Security picked a lower number?
So for next year, the forecast is 2.3 to average inflation for next year. So as to whether, I wish I could give you a really detailed answer on how they come up, what they use as a forecast or trailing. Wasn't the increase a year ago like 8.5% or something like that?
Yes.
Yes.
Does that sound right? Yeah. But I'd have to do a little more research as to how specifically they calculate that figure, but it shouldn't be too far off. Of course, as it relates to everything CPI, it's an individual thing, right? CPI is a basket of goods, but if your personal basket of goods is different, you may end up better or worse than that.
Yeah.
Actually, the basket of goods and services they use for the CPI is different than the basket of goods and services they use for the Social Security increases.
Yeah.
They tweak what's in that basket. So every year, the increase of Social Security is different than the CPI.
And the CPI components. And do you find it to be a better representation?
No, I can't be that granular with my own spending habits, to tell you. But it's a more conservative. I think it's intentionally meant to be a more conservative change in cost. I'd be speculating if I tried to define what it is. But the theory is that the goods and services for Social Security is supposed to be more closely tied into what the average recipient of Social Security
For that demographic.
yeah, for that demographic than it might be for, just the general, economy.
Yeah, it makes sense on paper. It's, I have a feeling history is going to not reflect kindly on our government. Not that anybody knew what the answers were during the pandemic, but the amount of stimulus that was put into the system contributed to a roughly 30% increase in prices across the board. And even though inflation may be down to 2%, it's 2% on top of the extreme price increases that we just saw. So, your average American continues to feel a lot of pain in this environment, just to put food on the table.
Yeah.
Not to put you on the spot.
But he's going to anyway.
Yeah.
Please do.
What is your feeling, maybe not TD's feeling, on what effect the November election's going to have on next year?
I think that, and I'll just back up and say, you may recall a chart that I showed you probably 2 meetings in a row where we looked at presidential terms going back to FDR and just showing how the stock market performed for Republicans and Democrats. And the, Republican presidents were up about 10% on the S&P 500. Democrats were up about 13% on that chart, although you may remember me saying Bill Clinton, he had the highest return, and he got out of office right before the tech collapse back in 2000. George Bush inherited the collapse and the financial crisis in 2008. And then Barack Obama had the second highest return, and he kind of benefited from the rebound after the financial collapse. So the point of that chart was to show our clients that regardless of which party's in the White House, equity markets tend to rise over time and kind of do well in either scenario. My personal expectation is that immediately after the election, we will see a big change in equity markets, either up or down, depending on who wins, and I have no way to predict that. Just because this race is so close, or appears to be so close, it's really tricky for the market to kind of price it in ahead of time. And so the day after the election, as we seem to hopefully have certainty on the outcome, that's a big hope. I wouldn't be surprised to see a big reaction one way or the other that then completely dissipates over time going forward. And much of that will depend on who controls Congress, right? If we have a scenario where Democrats control both the White House and Congress, I would expect that to be positive for the markets. And in the case of a Trump presidency, it's much harder to predict. He is speaking so emphatically about tariffs, which really would be bad for growth and for inflation. But he's also talking strongly about certain tax cuts, which the market may consider to be a positive reaction. So my best guess, Peter, is a Democratic victory across both sides probably is a big positive for stocks that next day or two. But as reality sets in, the realization that, what are we really going to be able to get done? I think we end up back to that TD chart where stocks go up over time, and as to who controls the White House in the long term, which is very much consistent with the time horizon for your portfolios, doesn't matter too much. What about you?
Turn the table.
Hey, Peter, tell us what you think.
No, I think what you're going to see, and it's interesting when you mention going back previous presidents. I believe Bill Clinton was the last president to have a balanced budget.
It actually, it almost, it was George Bush was president in the fiscal year, it was 2000, and it was, the government benefited tremendously from all of the gains, that were taking place in the stock market, and we haven't had one since.
Right. Yeah, I'm waiting to find somebody who's going to be elected and to balance the budget. And neither of the people that are now running are even talking about that.
It's not even a topic of discussion.
No.
No. Unfortunately, it means either raising taxes or cutting spending, and those two propositions tend not to get people elected.
Yeah.
This is a real problem, we'll just kind of leave it at that. We're not going to solve it today. As to whether or not it as a problem comes to fruition in our lifetimes, I don't know. At some point, there will have to be a reckoning.
Yeah.
Yeah.
What's our deficit?
But the one thing we have to keep in mind is after World War II, when, the winners decided that the new global economic regimen was going to be one where the U.S. dollar was the world's reserve currency, we somewhat inadvertently set ourselves up for a system that almost necessitates U.S. government trade deficits, not necessarily budget deficits, but trade deficits. And this is what we've created. Monetary systems tend to last somewhere between, if you go back to the gold standard and monetary standards before that, they tend to last around 40 to 60 years before they change. This one's getting old in the teeth. But also, to your point, nobody's talking about a substitute monetary system right now. Something will happen for sure. But in a world of fiat currencies, right, where no currency is backed by hard assets, it's a relative game. The U.S. deficit, you're talking about budget deficits, but if we just switch to the overall amount of debt that the U.S. has as roughly like 130% of GDP,
Excellent.
relative to China, relative to Japan, relative to Europe as a whole, we actually look pretty good, as sad as that is.
Other questions?
No, it's a good overview.
Yeah.
Yeah. Thank you for the questions. Thank you for the time this morning. And we will, I guess, next be getting together after the holidays. So I wish everybody a great rest of your 2024.
Thanks, John.
Thanks, John. Thank you.
Thanks, John.
Appreciate it,
Pleasure. Take care.
All right. Do you want to add anything, Judy, on these additional reports?
No, I mean, everything's covered by what you said.
Okay.
Yeah.
And then you get some checks for us to sign?
I do. I have a couple of scholarship checks and a couple of futures checks. I received
It was actually an interesting report.
school department, a request for 2 payouts for 2 students. I'll start with you because I know you like to look at those. And then these are just regular scholarship checks from pools that we determined.
Boston College.
Oh,
That's all right.
do you need a pen? Do you have
No,
one?
I got one. Oh, yeah.
Richard, thank you. These are two futures checks. And the backup from the superintendent is behind him. Never heard of it.
I was going to say, what
I've
is
never heard
that?
of it. Seattle, I have no idea.
But that's like, it's like a outside financial office for a university or something, because it's not actual.
Yeah. Thank you. And that was just the backup for each one.
You know, that's interesting, Judy. That's for 2 students. I haven't given up. I got to look into this.
We'll put that on the agenda for 2026.
No.
All right, any new business, gentlemen? Hearing none, I will
So-
entertain a motion to adjourn.
When is our November?
20th,
Just make sure
I
I get
believe.
that.
I believe it's the 20th.
Let's see.
Yeah.
Yep, the 20th.
And did we do December?
I believe
Yep,
so.
the 19th.
Yep.
The 19th? Yeah, okay.
Yep.
On the 20th, when's Thanksgiving? The next
Next
week.
week.
Is the
28th.
Yeah, so I'll more than likely be remote on
Okay.
the 20th, but I'll be back for December,
Okay,
I believe.
all right.
Will we adjourn?
I'll second that.
All in favor? Aye.